Hello and welcome, I'm Suyash Maheshwari and you are watching First Stick here on News 9 where we bring to you the morning action on the D Street, and we have lots to cover over the next half an hour as market continues to witness its sell-off in the for the second consecutive session. We also have Inox India's listing on the bourses today, and we'll also be joined by two very special guests in Mr. Amardev Singh of Angel One and Kush Bora of kushbora.com. But before that, let me also bring welcome on board Amit Ranjan, my friend and colleague. And Amit, interesting, session we saw last night for the US markets. It was flattish throughout the session, and the last hour or hour and a half, we saw a big crash.
Suyash, good morning. The best phrase I can put together at this time for world markets is a mixed sort of turmoil. S&P saw its worst day in two months. I see red everywhere, at least as far as the US markets are concerned. Even as the dollar found a footing yesterday, it steadied yesterday after a sudden rally in US stocks. US stocks, as we just discussed, tanked a little bit after a rally they were witnessing for a few days, and investors looked for some safety elsewhere. British inflation fell to their 2-year low yesterday suddenly at 3.9%. Sterling suffered its sharpest drop in 2 months. Now, coming to the indices, Dow Jones closed in the negative at minus 1.27%, S&P minus 1.47%, Nasdaq minus 1.50%. Coming to the European markets, they
were the outliers.
Yes, stocks was the only they were the only green patch.
Right.
In world index. They closed in the positive at 0.19%. Added to that, when I say mixed turmoil, oil prices also saw a sharp drop.
Right.
We were talking about oil prices going up because of the turmoils in the Middle East, but they saw a sharp drop yesterday.
And that's interesting because of the Houthi militant attack. We had seen a spike in the last few sessions, Amit, isn't it?
Yeah, Brent crude fell 65 cents and closed at 79.05 per barrel. US Texas Intermediate was down 55 cents and closed at 73.67. Coming to the Asian markets, the Hang Seng is in the red, minus 0.24%, and the Nikkei is in the red, minus 1.61%. So again, mixed turmoil.
Mixed bag, and it seems like the Indian markets had preempted some of this fall because we corrected yesterday, and US markets only started correcting, in the last session or so. And even the weak global cues are now weighing on the Indian markets as stocks continue to remain under selling pressure for the second straight session, with Nifty opening below the 21,100 mark with a drop of over 100 points. Now the index has in fact broken below the 21,000 mark, although it was momentarily for a short period, and from there on we have seen some sort of a bounce back, and we have in fact reclaimed the 21,000 mark. And as you can see on your screen, Nifty as of 9:30 a.m. this morning was down about 0.58%, sitting at 21,026 mark, whereas the Sensex had given up about 400 points or so and was at 70,083 mark. The crash continues in the broader market, both mid cap and the small cap indices, which by the way had seen one of its worst falls in the entirety of 2023 yesterday, continue to witness a crash. Now they are testing their technical levels of about 20 simple moving average, and volatility, Amit, has again picked up and it's fast approaching the 15 mark. Now we have not seen these sort of levels since January or March of 2023. India VIX as of 9:30 a.m. sits at about 3.3% higher at 14.93 mark. But with that, let's also bring on board Mr. Amardev Singh of Angel One Broking. Now, sir, there has been a lot of chatter about, what led to yesterday's fall. Some people have indicated that it was a rise in COVID cases in Kerala. Others attributed this fall to the rise in margins in the F&O segment. But in your mind, what is leading to this shakeout?
I would say a couple of things. One is that we shouldn't forget that we've had one of the best runs in recent times, and also it's a year end and a lot of I would say funds. They also close their books. So for them, it would definitely make sense to book profits, and because the profits have also been sizable. Because if you look across multi caps, be the small cap, mid cap, large cap to a certain extent. So they've made substantial returns. So these funds would also, because the smart money, the savvy money, they would also like to book profits and put it on the books. So I think that's also what we are witnessing in terms of profit booking towards the year end. And also there are definitely some concerns not only in India but across the world that the markets have risen too far. Because if you look at Nasdaq. Till day before yesterday, it was up almost 40%. Dow Jones was up almost 20%. So, and that also within a few months. So that clearly tells that the markets have run up too far and too fast. So there is time for consolidation. And those who thought that it's a good opportunity to book profits, they've looked at the markets to actually book profits and maybe look at entry at lower levels. As far as the macros are concerned, there's not much change there because it's not something which has triggered this major. It was more on expected lines only that there could be some profit booking, but the severity of the fall that we witnessed yesterday and today, that's quite sharp. But that's always okay. You can't help it. The markets are the way they are. We have to take that in the stride. So overall, we going forward, we'll have to see how the advanced decline trend behaves, how the all-time highs versus trend behave. These are two critical factors because the macros in terms of rural prices, in terms of geopolitical tensions, there's nothing new about it. So I don't think those are factors. And also some cool off in the US rate cut is also expected next year, second half. So those things the markets have already discounted. So I would say more of profit booking and year-end closure. That's one of the major reasons for the markets to witness this sort of sell-off.
Right, and I mean the headliners did correct, but it was a broader markets that took the real drubbing. Both mid cap and the small cap witnessed their second worst fall in percentage terms yesterday. So my question is, have the broader markets topped out given the kind of tremendous returns we have seen this year?
If I look at the small cap index has corrected. You rightly said it's corrected significantly, and there is a possibility that we could see a short-term top being formed. So this month also, the month closure is also going to be very, very important. But what we need to remember is that the trend still remains extremely strong on the upside. So any pullback, we'll have to watch out for whether it is really a change in trend or it is simply a pause or a consolidation or a profit booking with a long-term uptrend remaining intact. So because if I look at the small cap index, I see that there has been some sharp selling. But if I look at the longer term trend, that continues to be extremely strong. So that tells me that pullbacks would be used as buying opportunities unless we have some major negative trigger, which I really don't foresee given the current global scenario as of today.
Good morning, Amar. We talked about the broader markets. I'll just take you through what the sectors that led the fall, and leading them was Nifty Media, which fell 5.11%. Followed by Nifty PSU banks, and we've been talking about their performance of late, which have done well, but they fell yesterday by as much as minus 4.04%, followed by Nifty Metal minus 3.82%, followed by Nifty Realty and Nifty Auto. Today, of course, Nifty Media has corrected a bit, so has Nifty Metal. Do you see an opportunity here for the investors? Any specific stocks that you would recommend or would like to look at also?
You rightly said that we are seeing sell-off across sectors, and PSU definitely we are seeing some very sharp sell-off which has happened. But I would say that still among the large caps, SBI is one stock one can definitely look at on any correction. This is a stock one can definitely hold on to. Because if we see a major crack in SBI, then we could say that there's a change in trend. which is not happening as of now because HBI is into currently it's around 630 odd levels. It has got very strong support base coming around the 550, 580 zone. So any further pullback in the stock, that could be a good level to entry. Whereas on the upside, yes, it seems to be capped around 630, 650 zone. But still, that's a good 15-20% opportunity one can have if we see any further correction in that. And for the trigger to happen, I would say the levels to watch out for would be 20,000, somewhere around 20,800. That's a very crucial zone. 20,700 to 20,800 on the Nifty. That's a very crucial support zone because we did see some sharp correction yesterday and today. But we'll have to watch out for that because that was the low that it had made on 13th of December. So that's a very crucial and critical level for Nifty. Having said that, I would say across the sectors we are seeing some correction, and I would say that's a healthy sign. Nothing much to worry until we see a trend change. So if you ask me about Nifty, the trend, I would say now the trend is more or less consolidation. Still, you have to give the benefit to the bulls till we see Nifty closing below the 20,000, then 700, 20,800 levels. I would say it's more of that we could witness a pullback. But yes, one thing we definitely need to remember that whenever the market, any market, irrespective of it being India or the US, sees such a sharp correction that we witnessed yesterday, after a major rally, that tends to become a short-term top for definite. So we'll have to watch out for that. So effectively it means that higher levels would be sold into and we could witness some consolidation. As far as the levels to look at, 20,700, 800, crucial zone for Nifty. On the upside again, 21,500, 600, the high which it had made. That's going to be the zone of resistance. So it's more or less consolidation likely to happen. If we see some negative news flows coming from the US, then that could trigger some movement. Also, as you said earlier, that the US markets, Dow Jones, Nasdaq, all have witnessed some sort of sharp correction yesterday. So that tells me that profit booking is happening there as well.
Right. All right. That's the view from Mr. Amardev Singh, sir. Always a pleasure talking to you. Thank you for joining us here on News 9.
Thank you.
But with that, we'll take a short break. On the other side, we'll be back with Mr. Kush Bora of kushbora.com. Also, we have Inox India's listing, so stay tuned for that.
जब हम करेंगे तो पता लग ही जाएगा सलमान खान का करेंगे मारेंगे या जोधपुर में मारेंगे तो पता लग जाएगा
This is someone who is sitting inside our jails and is still very obviously and openly running and possibly the largest organized criminal operation in the country.
Student organization of Punjab University में सोपू का acting president type भी रहा है.
He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's presence are apparently no bar to how Bishnoi runs India's largest criminal empire.
News is now content. Just stream it. Download the world's first news OTT, News 9 Plus, ahead of the curve.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
The scale of the attack was something that we were surprised at. David Hadley was a double agent. The Americans did not want him to We're fully exposed. So all that he probably shared with the Americans was not shared with us in terms of intelligence. If we had that, I'm sure that we would have been able to deal with the situation far better.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Hello and welcome back. You're watching First Stick here on News 9. Now, Indian markets are holding on to, the early losses, but we have clawed back and clawed back. How? Because Nifty has reclaimed 21,000 again, and as we speak, Nifty is somewhere around 21,050 sort of levels. The Sensex, the 30 share Sensex, which had, by the way, slipped below the 70,000 mark for the first time in nearly 2 weeks, has also reclaimed those levels, and as of 10 a.m. this morning we are at 70,208 mark. The mid cap and the small cap indices, now they were the big losers, they were the major laggards in the morning session. Both indices were down somewhere around 1%. They have made a sharp recovery, and Nifty mid cap as we speak is flattish with a negative bias, down about 0.03% at 44,000. So we have in fact reclaimed 44,000 on the Nifty mid cap 100 index. The small cap index has moved in the green. It's up 0.07% and sitting at above 14,417 mark. But also we have Inox India that has in fact listed at a premium of about 44% at rupees 949 per share versus the issue price of 660 per share. Now the expectation was that the issue will open at a premium of about 75% or so, but the listing is below the expectation, but still significantly higher. At a premium of 44%, Inox India has listed in fact at 949, and you can see the visuals on the screen of the opening at NSE.
Company. We are grateful to our host BSC, members of the board, the book running lead managers, our shareholders and our well-wishers who took the time to celebrate this momentous occasion with us. Thank you all once again, and we request you to stay seated as we have cameras behind capturing this special moment. Once again, many congratulations, Inox India. Let's give them a big hand, ladies and gentlemen.
Alright, those were the visuals from Inox India's listing from the BSE. Has in fact listed at a premium, a big premium of 44% at 949 per share versus the issue price of 660. But moving on, let's also bring on board Mr. Kush Bora of kushbora.com. Hi Kush, welcome to the show. Always a pleasure speaking to you here on First Take. Now, a lot of us were confused about the reasons behind yesterday's fall, and in fact today's fall as well. But from a technical standpoint, I think there was the writing on the wall was there, right? RSI was in the overbought zone of about 80 to 85 for the past many days. PCR, Nifty PCR was approaching 1.5 sort of levels. VIX had spiked up to 14 sort of levels. So, from a technical standpoint, was this crash or was this correction inevitable?
First up, thank you for having me on the show. Always a pleasure, and I think we've started on the absolute bang on right note. because yesterday, if I can allude to those, there were a lot of WhatsApp messages, going around, giving out all sorts of reasons for, the markets crashing. Some of them were age old. I think we can call COVID age old, I suppose, right now. And how many times are we going to, attribute market fall to COVID, right? And then there were some other, points as well, but they were already known. They were either, a day old, or maybe already, the investors and the trader community already knew about it. So market was perhaps just trying to find comfort in their pain as to, why did this happen? But as I said, you hit the nail on its head. The reasons were purely, technical. The markets were extremely overbought. I mean, RSI of about 85, 87 on the Nifty hasn't happened in a long time. PCR was also approaching overbought territories. So this was just the reason. Also, let me put it this way. Yesterday, the magnitude of the fall was something that took a lot of players by surprise. And, the fact that even the first half was good and the second half sort of, gave it all away. That's where the problem hit. If this fall would have come, over the next, 2-3 days gradually, I don't think anyone would have been surprised. So you're absolutely right. The fall was more technical. Don't go hunting and reasons, when there are none. This was purely, a liquidity-driven rally, which fizzled out rather quickly. That's about it. And I think, in a way, a lot of, traders and investors, I understand, some of them would have made losses. But other than that, if you see from a broad perspective, it's a good thing, because these markets did need a bit of cooling off before heading to 22,000 on the Nifty. Yeah.
So Kush, good thing as in the market is still buy on dips, or are we seeing some sort of a reversal?
Oh, no, absolutely. I would call this a buy on dips market, right? See, in technical parlance, there is a theory where, a lot of gaps are created and, those gaps get filled. Now, yesterday, what happened was, there was a gap at about 21,200 that got filled. This morning, there was a gap at 21,000 that got filled. Now, if, not to set cat among the pigeons, but there is a big gap now, that's there, between the 20,200 and 20,500 zone.
Right.
I am not looking at that getting filled immediately. Maybe, there'll be some news 6 months, 12 months down the line, and perhaps markets might fill those. But for me right now, this market is very much a buy on dips. Now, because this is the year end time, the FIIs will now perhaps start going on holidays. Some of them would have already gone on holidays and vacations. The liquidity crunch will perhaps cause a bit of volatility, but on the whole, this is very much a buy on dips kind of a market. If you see between a day before and yesterday and then today, nothing has changed fundamentally, in the country or even in the globe. So that's about it. So for me, this is a much healthy dip. As I said, it's just the magnitude of yesterday's fall that is causing a worry, not the direction per se.
Good morning, Kush. You used the word surprise, and I would say surprise on Tata Steel. On a day they launched a brand new product in Tata Dureco, a branded ground granulated blast furnace slag, which is a cement alternative for infrastructure projects. Tata Steel stock was the third biggest loser after Adani Enterprises and Adani Ports. And that too, again surprise, it touched a 52-week high just 3 days ago on the 18th of December at 136.60. Over the year, last 1 year, it has posted gains of 17.78%, again surprise. Now, is yesterday's fall just a correction, or are the investors cashing out, or is there something else?
So first, we need to understand one thing in context, which is the metal pack, has rallied quite a bit already. So even that was due a round of profit booking. And let me also mention this, while we are a little bullish on the metal pack, we also, come in with the caveat that the metal stocks are due, or rather are, the more volatile ones from the pack. They are unlike your infra stocks or even the IT stocks for that matter, which have had quite a bit of a run and a secular run. Metal stocks are dependent on a lot of factors, especially the global factors as well, right? And hence you see, volatility in those stocks. Now, if I talk about Tata Steel in particular, you're right, the stock has actually dipped quite sharply yesterday. But then again, in context, it was at about 115 November 2nd. And then from there on, it moved to about 140. Sharp run up. If I put all of this in context, then yesterday's fall doesn't really seem as stark or as alarming. But as I said, for a single day fall, like what happened in Nifty and Bank Nifty, it's an alarming one. Now the stock is reeling below its 20-day moving average, which is placed at about 131. So I will wait for the stock to go above this level, settle, and trade above this for some time before considering a re-entry. On the whole, the structure doesn't look as bad because it's the support of that 125 128 zone where from where it had rebounded earlier also. So for me right now, no trade zone, one above 131. I think the momentum will continue and the stock will perhaps also head towards that 140 level that it recently touched.
Now, Coach, one stock that is in fact not falling, has not fallen in the last 2 days or so is HDFC Bank, and it's very surprising considering the fact that the Nifty banking index has given up about 1,000 points or so in just a matter of couple of days. But HDFC Bank was ended in the green, was up about 0.25% yesterday, still trading in the green. What's going on there? Why such buying interest in HDFC Bank?
Well, for once, this buying interest was missing in HDFC Bank for a very long time, wasn't it? So I think right now what HDFC Bank is doing is perhaps just a catch-up trade for, all the private banks and all the PSU bank rallies that, we had seen. HDFC Bank didn't even participate. And remember, I mean, the likes of HDFC and ICICI are typically your FII favorite. So, once the FII money returns, this stock had to move, higher. Now, the Bank Nifty fell yesterday. HDFC didn't participate, and I'd say thank heavens for that, because otherwise the Bank Nifty would have been in severe cuts. Yesterday even more than what it was. Now, just to put it technically, yesterday when the when HDFC Bank fell, it did not even go below the Thursday low, or rather the day before low. So that's a very encouraging sign for me, which is suggesting that there's very clear strength in this. So for me, even now from these levels on, after such a move, HDFC Bank is still a buy. Now, this is not a typical trader counter. So, have more of positional bets in this. And I see the stock headed towards 1720 and then 1775 levels. And on the downside, I would see, a stop loss close to 1620. And one last point, on that. The major reason for the fall yesterday for Nifty Bank was actually the PSU banks. It was, I think, the second biggest, the second highest cut on the sectoral indices was on the PSU banks, and we know that even they had run up quite a bit. So not surprising there. And for me, there's the buying opportunity on the likes of Canara Bank and SBI Bank also after this day.
Kush, buying opportunity on the likes of Canara Bank and SBI Bank. If I get you right, any other nuggets you would like to give to our investors today on stocks?
Sure. If that way you mean a general view on how to play the market, my suggestion would be when we talk about the buy on dips kind of market, this is the dip that we're talking about. And if you see the small cap and the mid cap indices have already started to run up, a lot of stocks have already started moving up. So, when you get these dips, consider those buying opportunities. One stock that I have on my radar is Kalyan Jewellers. This stock was doing fairly well just before, yesterday's, sharp sell-off. And even then the stock actually closed in positive. All it did was give up some of its gains, but still managed to close in positive. So Kalyan Jewellers is a buy on our radar. 1330 and 1337 are the targets, and 1316, 316 rather, is the stop loss that we've placed. It's already at target 1, so traders can still play this for target 2. Now, because of the kind of top we've seen, it's a good idea to stay with the large caps. So Larsen and Toubro is another stock that I have on my radar. Here too, I would suggest a long position. However, right now the stock is closer to its stop losses, so just be a little watchful. But even Larsen is something that I have on my radar from the large cap stocks.
All right, that's Mr. Kush Bora for you. Kush, always a pleasure talking to you. Thank you for joining us here on News9.
Pleasure. Have a great day.
All right, and the markets, in fact, Amit, have made a sharp recovery. We have, in fact, on Nifty reclaimed 21,100 mark. We are at the day's high. Nifty is just down marginally at this point, about 20 points or so, sitting at above 21,100 mark. As you can see on your screen, as of 10:10 a.m. this morning, Nifty was at 21,123 mark. Now, this is very close to the day's high. So we have in fact posted a strong recovery on headliners. But the big movers are in fact the broader markets, both mid cap and the small cap indices, which started 1% lower, was around flattish about 15 minutes ago, and now they are about 0.5% to 1% higher. In fact, Nifty Mid Cap 100 is strongly sitting above the 44,200 mark, up about 0.55% as of 10 a.m. this morning. Small Cap Index has added almost 1% and sitting above the 14,400 mark. And India VIX has come down, the index has come down by about 0.4% or so at 14.39 sort of levels. But with that, it's a wrap on this edition of First Sig. But stay tuned with us as we'll be back with Business Plus right after this short break.
Bangalore traffic is an example of something that has gone wrong with our system. We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore